The harder one, I think, is going to be on 12, because it's going to jump you right into reporting and analyzing cash flows as if you know what you're doing at this point, and you really don't. So you're going to be freaking out on chapter 12, right? But think of it as simply as you can, okay? And so it's going to go through the basics of cash flows, and it's going to break it down into these three different areas: operating cash flows, investing cash flows, and financing cash flows. And it's going to describe what each of these are. Now, in general, operating cash flows are things associated with money you received for the work you've done and expenses you've paid for, being able to provide that, whether it's labor expenses or whether it's let's say rent, or let's say it's an automobile or something like that, the day-to-day expenses of operating your business. Those cash flows are going to go in there, and they're going to show you how to get to that value of cash received from the operating side of the business. And cash flows associated with investing might be something like when I bought the house, right? So I bought the house, that's an investment activity. Or I buy a piece of equipment, that's an investing activity, right? So it's going to walk you through the different types of investing activities and the types of cash flows associated with that, and then how to organize it and record it. Or recorded is probably not quite on this one. It's more reporting. How do you report that information? Because all the reporting's already happened. At this point, you're just looking at the account balances and then figuring out how to report it. And then on the cash flows from financing, this would be more like on when I bought the house. Where did the money come from, right? Did it come from an investor? Or did it come from a bank, right? And that's the liability side of the equation. So on the balance sheet, so you're looking at, generally speaking, your liabilities with any investments that have been made, and your owner's equity that's been increased or decreased based on any changes in that investing. And you'll see that in this and how you do that. All right. So hopefully, while it may seem quite like you're jumping into the deep end on this in chapter 12, because you don't have really any context of how all the information has been recorded, you'll at least have a sense for, okay, what are the accounts that go into these different buckets, right? I like to, in accounting, we always talk about buckets. Other parts of accounting might talk about widgets. Mainly that was on the management side of things. But on the financial accounting, you're talking about buckets or accounts. And then once you've recorded it into the accounts, how to report where do these accounts go? Or do they go on the balance sheet? Do they go on the income statement? Do they become part of the cash flow statement? Where do they go in the cash flow statement? So those are the two components that you're working with, really a reporting aspect of accounting from the get-go. Okay, so that's chapter 12.